Welcome to everybody and really appreciate your time. Today, James and I will touch on our most recent trading update, which again came in ahead of the market with really strong cash generation. So we continue to take market share while generating strong levels of cash. We'll then take you through our recently released new medium-term targets and also walk you through some key slides from our Capital Markets Day. This isn't a bridge deck that we'll work through today. The full deck is available on our website. Giving some context at the start of this hour, I think it's worth noting that over the last 10 years, we've made significant progress as a group. And most importantly, our strategy of consolidating the bathroom and kitchen markets in the UK and South Africa has led to a position where we are now the #1 bathroom supply products business in the UK. Not only are we the #1 bathroom product supply business, we're also supplying into a very resilient and a lot more profitable mid-premium market segment than we were 10 years ago. This additional scale that we now have is important to us. It allows us to take advantage of demand and cost synergies that a lot of our smaller competitors can't. And as a result of that, we're able to drive organic growth faster than many of our competitors. By the end of the session, you will hopefully have a better appreciation of what sets Norcros apart, because we are different from many of our competitors. We are not just a traditional building products company. And those differences help us to outperform the market. James, if you could just touch on the trading update, please.
Yeah, sure. Thanks, Thomas. Good morning, everybody. Yes, in April, we had our trading update and revenues were in line with market expectations. And EBIT was in line with market expectations, and we'll be delivering our full year results in June this year.
Thanks, James. And if we just move to the next slide, please. So if we have a look at our updated medium-term targets, and we're able to publish these targets, #1, because we're not coming from a standing start, and #2, the kind of scale and increased collaboration that we're able to leverage across the group allows us to do this. We have and we will continue to grow our organic business 2 to 3% above the market. We have set a new operating margin target of 15% over the medium term. And it's quite interesting that post the disposal of our Norcros adhesives business last year, and more recently our Johnson tile business, our UK business is now very close to this hurdle already. We've always maintained really good cash conversion, and we hold our target at greater than 90%. We have moved our ROCE target from 15 to 20% and are comfortable to be able to do that. And we've added a target in and around science-based carbon emissions, and these have been verified. And our first set of targets sit around 2028. They are ambitious, they are in play, and we are well on track to delivering those. We'll just move to the next slide, please. So if we have a look at the business that we currently are, as I said, we are the UK's #1 bathroom products group. And in that group, we have market-leading bathroom and kitchen product brands. The fact that we're market-leading and we are well-positioned in the mid-premium market segments mean that we are resilient in terms of pricing. We have very strong drivers in terms of demand. And that is supported by the third block, which is on the bottom left, which is our exceptional in-house product design, and then our customer service. Now, the customer service piece is hugely important, both in the RMI segment and also in house builders. We're very well invested there. And if you post this or more interested, you jump onto the full video of the Capital Markets Day. There's a segment by John Adams from Barrett's who talks about why Norcros wins in the house builders. So although it's been an RMI market, and that is where we are strong, we're well positioned in house builders, and we're really in a good position to take advantage of the expected upturn. Our business remains capital light and cash generative. Just as importantly, we need to talk about what we are not, and if we could flick slides there, please. When we're looking at why Norcros is different from many of our building products peers, the first thing to note is we're not a distributor. We design and develop our own products and brands, so we don't buy off the shelf. The fact that we do this means we control quality, we control design, and we are also able to generate better margins. We increasingly have moved away from capital-intense manufacturing, as seen through the disposal of Norcros adhesives and more recently Johnson tiles. We are very much not a heavy side building product supplier. And what do we mean by that? We're not into selling commodities like cement and roof trusses. And because of that, and because of the positioning of our business model is less cyclical and more resilient. And by implication, we actively avoid economy or low margin supply into any kind of customers or channels. So I think that is really, really important. James will now take us through our business portfolio and a little bit around our brand positioning. Thanks, James.
Thanks, Thomas. So just on slide 5, I think the key message here is that we've accelerated the development of the group through acquiring and growing great brands. As you can see, we operate as a balanced group of autonomous divisions, and the split of these is shown in the chart on the left. And I think importantly, each division is driven by product and sector specialists. And this specialism is crucial and in particular helps us to differentiate. Importantly as well, we collaborate across all our divisions to drive faster growth and efficiency gains. We have a good track record of cross-selling, albeit we are very excited with the significant opportunity to do lots more together. So the key takeaway here is we've got a diversified portfolio that's a great platform for growth. So if you take us to the next slide, please, Andy. So looking at this slide 6, we have strategically positioned the group in the areas of the market that we believe are most resilient. And firstly, we are not over-indexed to new build. And so if you look at the chart on the left, we note that about 80% of the bathroom products market is driven by RMI. And RMI is more resilient than the new build housing market, which is more cyclical. And our Norcros revenue mirrors this RMI new build split, which is approximately 80-20. Secondly, we have consciously focused the business on the mid-premium segment of the market. And looking at the chart on the right, you can see this is approximately 70% of the total market. And this mid-premium sweet spot, we believe, is more resilient to cost of living pressures as consumers in these segments are prepared to pay more for quality products and great customer service. Next slide, please, Andy. So just turning to slide number 7 here, you can see we have a broad route to market across trade, retail, and online channels, and a significant export business. We have a strong customer list with over 1,000 blue chip customers. And importantly, we have a great track record of building long-term relationships with our customers across all of our group. And you can see in the graphic there, such as Barrett's, Wickes, and Howdens. Importantly, we are increasingly chosen because of that strong product design that Thomas mentioned, stock availability, and outstanding customer service. And the key takeaway from this slide is this significant breadth and depth of our customer relationships provides great stability and great opportunities for further growth. Thanks, Thomas.
Thanks, James. So in summary, we've got a successful and scalable platform, and we're really well positioned for our next phase of growth, and it'll be growth that is ahead of market. We have a very strong track record of growing market share and growing that share in a balanced manner between organic growth and M&A growth. We have market-leading brands. I think Triton, Merlin, Grant Westfield, they are all market leaders with very, very strong positions in the mid-premium market segments. As James has pointed out, we have diversified products and channels. This makes us a lot more resilient than a lot of businesses, and specifically businesses that sell commodity products, which we do not. And we are differentiated by design and customer service, as I pointed out earlier. I think there's something else that's worth noting. We run a decentralized model, and what that model ensures is that we have the very best talent at the rock face. So again, if you go onto the longer version of our CMD video, there are 4 presentations by 4 of our business leaders. And if you look at the quality of those teams, you will understand why we win against some big corporates who just have corporate managers running their businesses. Given our scale and proven model, we're really well positioned to accelerate the growth of the business and the quality of our returns. So, as we've mentioned earlier, we operate in large and fragmented markets, and today we're going to be talking about our core addressable market, principally. If you go to the full deck, you will see how we talk about the wider addressable market, which really talks about, firstly, adjacent categories and then careful geographic opportunities that we would look at. But our clear focus is very, very much on our core addressable market. James, I don't know if you want to add anything on this slide.
Yeah, I think this is an important slide. I think firstly, when you take our product categories and geographies, we currently operate with a total core addressable market of some 3.5 billion. I think importantly in the UK, as you can see on the left, we are the market leader with a share of approximately 15% in our core categories. And in SA, we're number 2 in the market with a share of approximately 7%. And I think they're both particularly attractive markets to be in, given the shortage of housing and infrastructure to meet growing populations. In the appendix in this deck, which is also online, I think if you then look at the wider product segments, our addressable market increases to 6 billion. And then if you look at the international piece, that it increases to over 10. I think the point being, these are large, attractive, fragmented markets. We're the business of scale, and we're able to take share. Thomas.
Thanks, James. We could move to the next slide. So when we look at the Norcros growth story, we have a great business, and I think that's an important point. We already generating excellent returns on capital employed, and also a strong ROS. And when we look forward at what we want to do, we don't forget what's got us to where we are. So if we're looking at this slide, the things that will remain the same is we will build and entrench ourselves in the mid-premium market segment. Our focus remains on bathroom and kitchen products. We have a very strong M&A team that resides in Wilmslow, and that engine will help us to continue driving scale. We will remain focused on design, sourcing, and customer service. So again, a capital light model where we focus on the things we're really good at, which are design and customer service. I touched on the entrepreneurial culture and evolved structure. We will protect that, and we will remain capital light. What will evolve, though, is we'll actively drive scale using our growth accelerators, both organic and M&A. We will become increasingly capital light and high growth. We will now lead, and we are already leading on design, importantly sustainability and service. And again, we'll talk later to some of our sustainability credentials and where those are going. Given our scale, we are increasingly developing our ops platform, and what that really does is it allows our businesses and our devolved businesses to focus on what they're good at, while we support the areas of the business that we don't need to develop 7 or 8 times. And something like our digital platform would be a good example of that. And we will focus and be absolutely laser focused on building our scale, improving our operating margins and our shareholder returns. I think it's important on this slide to note, we've spoken about M&A, we've spoken about organic growth. James has spoken about our core geographies and categories. We will be careful as we move out of our core UK market. And quite often when we move out, we don't have to invest anything. We follow customers and existing customers like Howdens into France, for instance. We're able to build up demand without investing any additional inventory or any needing to put down any real infrastructure. So that growth allows us to build demand and then follow through with our full service offering later. Thank you. We can just click to the next slide. If we look at our strategy, we run a very detailed annual Norcros strategy session with our divisions. That is looking at each individual division, their performance, and then what we do collectively. And that's important because we are more than the sum of the parts because of the kind of collaboration that we pull together. So looking at our strategy, what we are about is we craft design-led sustainable bathroom and kitchen products. That's what we do, nothing more. Very, very focused. We are renowned for design and sustainability. We are developing a leading digitally enabled service. We are all about inclusive and growth-focused culture. So if you've got a model like ours, which is entrepreneurial, you have to keep the very best talent you can. And the best talent wants to be able to make decisions, operate, and contribute, and that's what we focus on. And as we've said earlier, we're very focused on scaling up, but while we do that, not sacrificing our market-leading returns, in fact, developing those further. We're going to touch in a little bit more detail on our key strategic initiatives, which are M&A, organic growth, operational excellence, and then the thread that runs through all of that, which is ESG. James, click to the next slide.
Thanks, Thomas. So just picking up on M&A on slide 13, going forward, we will continue to take an active approach to managing and developing our portfolio. And in terms of acquisitions, that means we will focus on consolidating those large and fragmented markets that we spoke about earlier. We will continue to back quality, cash-generative businesses with low capital intensity and strong management teams. And I think the overall philosophy is, in our ownership, we will grow these acquisitions faster than if they remained independent. In terms of divestments, if divisions no longer fit our strategy, we will make those divestments and focus on where the opportunities are more significant with stronger operating margins. And this started with the closure of our UK adhesives business in 2023. And you may have seen a week or so ago, we agreed to sell our Johnson Towels UK business also. Just flicking to the next slide, please, Andy. So just here on slide 14, you may have seen something similar in a previous deck, but I think the key message here is that you can see the acquisitions we have completed over the last decade and how they've supported our growth. And we believe we succeed in M&A because of our focused due diligence and focus in terms of integrating these businesses. And some of those success factors are there at the bottom of the screen. Thomas, back to you.
Yep, we can move to the next slide, please, Andy. A good example of how we grow businesses that we acquire would be Merlin, and more recently Grant Westfield. But we'll talk to Merlin today. We acquired this business in 2017, and we've grown the revenue from 30.7 million to 57.5 million. And the real key things here is jointly with the management team, we still have the same management team in play. From the center, we've helped them invest in people, new product development, and other areas of the business. Very importantly, we've introduced them to a much wider range of customers, both in new build and RMI, and good examples of that. A great example of that would be Wicks, which is now a £5 million per annum category, and we built that up over the last 2.5 to 3 years. We've been able to protect the positioning of the Merlin brand and sell shower enclosures into Screwfix using the Triton brand, and that's a great example of collaboration. It's not transactional. There's no intercompany charges. We just make sure we understand which brands fit where they are, and the teams work together to do that. And of course, the Norcros Group financial strength has been a great enabler for them. If you look at the bottom two blocks, in 2017, they were doing around 7 million with the house builders. If we look forward to 2023, that's 21.4 million of revenue coming from house builders and new channels like Wicks that we've introduced them to. This is a great example of the impact of us acquiring a business, growing that business, and while we're growing it, we've protected the operating margins of that business, so we haven't had to sacrifice anything there as we've grown the business. And you can well imagine the positive impact that has on the group numbers and the group operating margins as well. So if we can move to the next slide then, please, Andy. So when we look at our M&A and the key themes in our M&A, we'll continue to fill the gaps in the UK with a strong focus on furniture and sanitary ware. And again, that would be in the mid-premium space. I'm really pleased to announce that we have recently launched a furniture range in Vardo. Vardo were able to lean and leverage off our South African business, which already has a full bathroom offer. And we know that we can make really good returns and gain market share in both of those categories. Looking forward, we believe that the assisted living or care or adaptive segment will become increasingly important. We have aging populations in all of our key markets, and there's a real opportunity to drive organic growth in those segments, and we've started that journey. In terms of new capabilities, and it's not entirely new, we have been focusing hard on sustainable products, specifically through Triton Showers, who their strategy leads with sustainability. They've just won, and we, I think, announced it this morning, the King's Award in this area, and it's well worth jumping onto their website to have a look at what they're doing in and around sustainability. Our Grant Westfield business that was recently acquired has very, very strong sustainability credentials as well. We will also be looking at digital kitchens and bathrooms of the future will be increasingly digital, and it's hugely important that we accelerate our progress in that area. And then in terms of new geographies, we're not going to do anything silly. As I said earlier, we will look at our neighboring geographies where the markets remain large and fragmented. And in those geographies, we will also look at complementary products. We expect that M&A will make up over half of our revenue growth over the medium term and play a key role, both in terms of our scale, but also the overall quality of our earnings. If we could click to the next slide then, please. This is a really important slide. Organic growth remains our key growth driver. And what I really want to take you through here is why we are able to grow organically ahead of the market. The first important point to note is we have an outstanding new product development program in all of our businesses. We have very strong in-house design capabilities, and that is both from a technical and an aesthetic perspective. We focus on on-trend quality and sustainable products. And our product vitality rate, that is products that have been launched in the last 36 months, those account for more than a quarter of our sales. All of our products work with water and energy or a combination of both. So this is an area, and we are well positioned to drive and grow strongly in these key areas of sustainability, and the demand in these areas is growing. The second, and it links back really to a slide James put up, is key account management. We develop long-term partnerships with all of the winners, and we carefully select who we do business with and back those winners. And again, I would really encourage you to have a look at the Barrett's video on the site. Thirdly, cross-selling. This is where we share leads and customers between our businesses. Giving you an example with Merlin, and we'll talk a little bit more about how we've done this with Grant Westfield as well. The final block is customer service, and we invest heavily in this area. Key reason people do business with us is because we are the trusted partner. If you go back to the Barrett's video, or you talk to somebody at Wix, for instance, what they will tell you is that their customers are our customers. And if there's ever an issue, we're all over it, and we make it our problem and we resolve it. So, a lot of smaller people and smaller competitors can come in, offer slightly better pricing, slightly lower quality. But I think what we have seen over the last 4 or 5 years is when somebody offers you a warranty or a guarantee, you want to be able to lean on it when you need it. And a lot of painful lessons have been learned in that regard. So we invest heavily in customer service, and our after-sales service specifically is market leading. So we could click to the next slide, please. When we look at NPD, as I said earlier, strong in-house design, very, very strong and well-developed NPD pipeline. We have seen the recent launch of Envy at Triton. We've also seen Nature Panel come through from Grant Westfield, and as I've mentioned, the Cameo bathroom furniture range from Vardo. This is just like a drumbeat. It runs through our business. It contributes significantly in terms of our ability to grow ahead of the market and also to grow our operating margins, because most of the products we're launching are in that mid-premium space, have strong sustainability credentials, and are just driving a better and higher quality business. We collaborate strongly on group ranges, making sure that we match finishes, which is really important. And as I mentioned earlier, our vitality index is north of 25%. The picture on the left-hand side is quite interesting. This is a Pronto tap. It's a hot water tap from our Abode kitchen business. We do just below £5 million worth of turnover a year from this product. But this is a fast-growing category. We would see ourselves as the second player, a strong challenger brand to the number one player in this market. The number one player has revenues in the UK of north of £50 million. We have a product, we have great design, we are well positioned, and we are able to grow now and take share from the market leader because we've got a better product. Our product is RAS approved where theirs isn't. We have excellent design, excellent customer after sales service. And this is a great example where our NPD will allow us to grow organically without further heavy capex investment. So profitable organic market share growth is an absolutely key driver in our journey to a 15% operating margin across the group. We could just move to the next slide, please. When we look at organic growth and specifically the cross-selling part of organic growth, this is just a simple example of where we've taken our UK businesses and then looked at our top 20 customers along the bottom. And wherever you don't see a dot, that means there's an opportunity for us. And those are the opportunities that we jointly, as a management team across all of the divisions and from Wilmslow, target. And we selectively target where we go here. Excellent progress has been made here in terms of cross-selling and growth as shown through Merlin. And if we click to the next slide, this is a slide that came out of the Grant Westfield deck at Capital Markets. Since Grant Westfield has joined our business, we have introduced them to Tops Tiles, and the Grant Westfield range is now rolling out across all the Tops Tiles. We've got them into Screwfix and we've got them into Wix. That would normally take 3 or 4 years of really hard work, working your way up to get yourself listed in these. But we are trusted by all of these key accounts. So when we bring them a new product, we are able to get our product in and listed in an accelerated manner. So those are the 3 that have recently gone into Grant Westfield. All 3 would be multi-million-pound accounts. And we look forward to, seeing the growth that has already started continue to run through here. So really, really strong ability to grow businesses that we bring in into the Norcros family. Thanks very much. We can click to the next one. We're then looking at operational excellence, and operational excellence is a broad term, but for our purpose, it's about using the benefits of our scale to drive improved service, efficiency, and operating margins. Our scale enables us to access service and cost synergies that are not easily available to our smaller competitors. And in a fragmented market like ours, that is a key competence to have. The compounding effect of higher service levels and lower costs is an important driver in our program to increase our operating margins. So when you compare Norcros to many of our peers, we have critical mass and scale now. We have an outstanding culture of collaboration and learning. We are increasingly driving cost and service synergies. And while we do this, we maintain the strength of this decentralized model that sees the very best talent that we have and that we can attract, operating at the rock face, dealing with our suppliers and our customers. Going forward and leveraging off the scale, we will increasingly drive lean operations, further coordination in warehousing and distribution, further coordination and collaboration in supply chain, and also very, very importantly on the data side. We don't want to be doing things 7 or 8 times. We, across the businesses, are collaborating hard to make sure that we collect the best data we can, the most accurate data we can, be that from consumer insights all the way through to market data, and are able to leverage the knowledge that comes from that. Thank you. We could click. What I said earlier was that if you take the first three, which is M&A, organic growth, and then operational efficiencies, we have a common thread that runs through that, and that is our ESG. And ESG is driving a competitive advantage for our group. Again, given our scale and size, we're able to do things from, be it on a new product development side, be it from entry markets, that a lot of other smaller people can't. We have an established ESG framework, split between three key things, and there's our people. And again, I think I've explained how important our talent is to us. Our product, which really looks at NPD investment and how we develop products, where we get those products from, so that we're able to give customers a very, very strong or powerful choice for better living. You know, we're not forcing customers to buy any specific products, but I think it's hugely important, and we have a responsibility to ensure that customers, number one, understand the difference between products and the sustainability credentials they have, and number two, are able to do and make a considered and informed choice. And then on the planet side, which is our world, you know, we firmly believe that we should be putting in more than we take out. Every business that's out there, if they don't have a strong sustainability agenda, they will become irrelevant going forward. So we do this in our business, and we also do this outside of our business. Very, very important for us. So if we could move to the next slide, please. So an example of this would be at Triton, where we are the market leaders in electric showers. You know, we have a market share north of 50% in this space, and we are growing that market share because of our strong sustainability credentials. If you look at electric showers, they enable both environmental and cost benefits for our consumers. So typically, an electric shower has costs about 30% less to operate than a traditional boiler-fed mixer shower, uses about 68% less water than a mixer shower, and emits around 70% lower CO2 emissions than a mixer shower connected to an A-rated combi boiler. And with our latest products, not only does it do all of those good things, it does not compromise in terms of design or the shower experience. And if we're able to move on to the next slide, please. On the left-hand slide of slide 24 is our recently launched Envy electric shower. It is a fabulous shower available in many different finishes. You no longer have a electric shower box on the wall. That box can go in your roof, it can go in the wall, it can go in your furniture next to the shower. It is very easy to fit. So it is the first new generation behind the wall electric shower. It has an excellent high-tech touchscreen interface, which you can see there, with multiple settings for multiple users. The interface nudges you to improve your showering behavior. If you have teenagers, you can actually set their showering time, or at least explain to them what they're doing. And for any of you with young growing teenagers or young people in the house, you will note that they are a lot more sensitized to sustainability. As I said, it's very easy to install, and is our first climate partner certified range. So absolutely fabulous product, and a key driver behind our King's Award, which was announced today. I think the other important thing to note here is electric showers have strong regulatory tailwinds behind them. We all know about the future home standard that's coming into play. We have had all major house builders in our innovation center in Nuneaton talking to us about how we can help them meet the new standards, and that's really about moving away from boilers. We have some excellent work going on here, and are really confident that electric showers are going to be a key part of the future, not only in our existing markets, but also in new markets that have not traditionally looked at this as a key driver for future house building. So very, very excited about what ESG is doing for us as a business. We have clear targets. We are well on our way to implementing our targets for 2028. And as I say, by giving our customers a powerful choice for better living, we continue to differentiate ourselves and drive market share growth at higher margins. Thank you. If we could click to the next slide. James, if I could hand over to you.
Thanks, Thomas. Just very briefly on this slide, you can see our 10-year track record, which is very strong track record of delivering growth. And I think in the top two charts, you can see that organic growth, which has been enhanced by successful acquisitions, driving both revenue and improving underlying operating profit. In the bottom left chart, we've consistently delivered a strong return on capital. And I think to note, we will look to improve this further as we focus on those businesses that do have a low capital intensity. And then finally, looking at the chart in the bottom right, we've always been highly focused on cash and consistently delivering high cash conversion, and that will continue going forward. Next slide, please, Andy. So on slide 26, we move to our new strategic KPIs and targets, which are built on the 4 strategic pillars that Thomas was just talking about, being M&A, driving faster organic growth, continuing to invest in improving our operational excellence, and ongoing focus on that ESG part of our products and business to drive initiatives to drive competitive advantage. And as a consequence of delivering on these, we believe our targets are deliverable over the medium term. And those targets are driving organic growth 2 to 3% above the market, improving our operating margin to 15%, to be highly cash generative and continue to deliver over 90% cash conversion, and to achieve a ROCE in excess of 20%, and to deliver on our 2028 SBTi emission targets. Next slide, please. So just here on slide 27, sorry, you can see the potential to drive organic margin enhancement, improving from 11% in FY24 to 15%. And I think the key buckets there you can see driving that are firstly disposal of adhesives, and then similarly disposal of Johnson tiles will increase those operating margins going forward. The second is operational excellence, and Thomas talked to a number of projects that are already underway. Thirdly, we've got the investments in MPD, marketing and sales that are focused on growing the higher margin parts of our business. And finally, as markets gradually recover, this will drive efficiencies and improve operational leverage. And overall, we believe there's a clear pathway to improve our operating margin to 15%. So on to the next slide, please. Slide 28. We strongly believe that investing in this growth strategy built on those strategic pillars will deliver better shareholder returns. And we recognise it's important to carefully assess where that capital is deployed. So on this slide, you can see we talk about 3 core areas of capital allocation. Firstly, investments in innovative products, outstanding customer service, efficiency and sustainability projects will drive organic growth and margin progression. Secondly, in M&A, and acquisitions will accelerate growth, delivering EPS accretion. And thirdly, for shareholder returns. And as a result, the outcomes can be seen on the right in terms of ROCE, leverage, and a progressive dividend policy. Thanks, Thomas. Back to you.
Perfect. We can just move on. So when we look at Norcros, we have a really compelling investment case. We have clear alignments and goals, and really haven't come into our capital markets day, or in fact today, from a standing start. Our organic growth drivers are all already in play, and we will continue to be supported by a well-developed M&A pipeline that will further accelerate our growth and our drive to increase and improve operating margins. If we could click to the next slide, please, Andy. So when you look at our investment case, we really have clear strengths that we play to. As we've pointed out, we've got the scale piece. We are the #1 bathroom supplier in the UK, and we're #2 in South Africa. We have market-leading brands that are supported by design-led and sustainable product development strategies. We have the benefits of scale that we've spoken to that drive organic growth ahead of the market, and also enable operational excellence opportunities not available to some of our smaller competitors. We have a very resilient model driven through our diversified portfolio and our mid-premium positioning. And we're hugely proud of our proven track record, both from organic growth perspective, our M&A, our financial performance, and our disciplined capital allocation. And I think what's hugely important, and when you look at why we are different, we've been able to navigate through COVID and the Suez crises with no issues whatsoever in terms of our operational service levels or our ability to continue taking share in the market. And the fact is that these challenges have in fact been an opportunity for us. So we see a significant opportunity, given all of these things, to continue accelerating our growth both organically and through M&A, and also, as James has rightly and accurately pointed out, there's a clear path to driving our operating margins up to 15%. We could move on to the next slide, please. So as the market leader in design-led sustainable bathroom and kitchen products, we have a successful and scalable platform. We have a significant opportunity to develop and grow, and we have a clear strategy, and it's no different from what we spoke about to you in November, or in fact, that when we set them out in June 2023. Our plan is already in play. It is not coming from a standing start, and we believe that our new medium-term targets of growing organic growth ahead of 2 to 3%, which we've been doing anyway, getting our operating margins up to 15%, and our return on capital employed up to 20%, sets us apart from many of our building products peers and competitors. If you actually look at our financial metrics against many of our published peers and competitors, you will see and understand the quality of the business that Norcros has developed. I really trust that you've enjoyed the session today, and we're going to go to questions shortly. But I hope you have a better understanding and a deeper understanding of what sets Norcros apart, especially in terms of the quality and passion of our people. That is the differentiator. Our decentralized model drives our growth ahead of many of our, let's just call them more moribund peers and competitors. We have fantastic market-leading brands, and our scale and collaboration does make us more than the sum of our parts. We will deliver on the targets we have set up, and we look forward to doing that and delivering great returns to our shareholders. With that, I'd like to open up for questions. Thank you.
We've received a lot of questions, mostly relating to strategy. So let's dive straight in. Does the current management team have sufficient bandwidth to pursue M&A with the extreme care and attention that James already alluded to that has led to successful integrations, whilst moving forward on the other three strategic pillars at the same time?
Yeah, I'll jump in there. So I think we've got an in-house M&A team that's driven our M&A over the years. In fact, James used to head up that team, so it's probably stronger than it's ever been because we've got that team plus James sitting in the CFO role. And on the organic side, and looking at the other three, we've brought in Helen Roberts, who heads up the UK businesses. Very strong track record in all of the areas that we're really focusing on. So that decentralized model with the additional help from Helen and also Helen on the people side, being Helen Gobsell, we've invested a little bit extra, but our decentralized model and the kind of skills we have, we're absolutely confident that we can deliver on those as we already are. So yeah, the bandwidth is there.
Just to add to that, Andy, I think we do have the bandwidth in terms of the team and the resources, but equally, we're not going to be doing a deal every 3 months. We just don't want to be going down that route. Our focus is on really detailed due diligence, doing the right deals that are right for us, and being measured and being quite selective.
Yeah.
Yeah, thank you. And I'm sure there's not a specific answer to this, but at the moment, group revenues are roughly 2/3 UK, 1/3 South Africa. You've mentioned the opportunities lying in close areas, Europe and the rest of Africa. What proportion would you be happy to see of revenues coming from new areas, say in 5 years' time?
Well, I think there's two pieces to that. So, our growth into new areas will probably be closer to our core UK market at the moment. And as I probably said a little bit earlier, that can come from organic growth, following our customers into those areas, or through M&A where we are already in those areas, like a business, Grant Westfield, for instance, is strong in the DACH region. So I wouldn't like to put a number on it. We won't charge, as James said, into making acquisitions in markets we don't know. So we would probably look to go into market with our existing customers, build up some kind of a presence, and then get into M&A. So I wouldn't want to split it out, because we also just wouldn't do it for the sake of doing it. But it would be, it's a key driver in our growth strategy.
Okay, thank you. Let's talk tiles. A couple of questions. What is different about the South African tile market compared to the UK, given your exit recently from Johnson's?
I think there's two things. Johnson Tiles was a wall manufacturer only, and you can only use wall tiles on the wall. South Africa is a floor tile factory. The tiles can be used on the wall and the floor. The second key point is our South African business is partially integrated. So we sell a lot of our manufactured tiles through our Tile Africa operation, and also then through independent markets into a very clear market segment, which is the house builders. So we have a very strong manufacturing operation. We have an operation with a very clear route to market, and that's really what makes it different.
Okay, thank you. James, probably one for you, having your long experience in M&A. You both stressed the cultural fit that is very important to adding businesses to Norcros Group. What about financial criteria? What are the multiples that you're prepared to pay when it comes to pricing?
So I think if you look at our track record on that, Andy, we pay fair prices in terms of multiples. We're not going to pay 10, 12 times EBITDA like you might see for a tech business. But importantly, we assess in a way that, how do we add value? Can we add value to that acquisition target? So that is an important part of our due diligence. The integration plan, the efficiencies we can drive, and importantly, how can we make that business grow faster under our ownership? And in particular, their demand synergies. How do we get more customers into the new acquisition? It's not about reducing costs and making redundancies and things like that. It's about demand drivers.
Thank you. Very logical. Newer markets or newer products. We've got a question of which parts of furniture and sanitary ware, which are big markets in their own right, do you think present the best opportunities? And following on from that, another question: what are the challenges in moving beyond your home turf of bathroom and kitchen?
Well, I think let's start with the second. So we're not really going to move away from the home turf of bathrooms and kitchens. So when we talk about furniture, it's predominantly bathroom furniture that we're looking at. And again, we have a full offer available in South Africa already. So when we launched that, probably a year and a half of preparation in the UK, leveraging off the South African supply chain, but very importantly, making sure that that product be relevant to the UK market. And again, if you jump onto the Vado website and have a look at the Cameo range, that is the range that's just launched. So we're not about to do stuff we don't understand. We do it, much like our M&A, we spend a lot of time researching it. And I think the great thing is we can actually enter these categories organically, like we have with Vado, or through M&A when it makes sense, like Grant Westfield. So we've got two routes in. And I think finally, we have hugely experienced management teams across our businesses who understand the bathroom and kitchen markets far better than James and I probably ever could. And they're a big part of us, making the decisions in terms of where we go and why we would win there. Nobody's waiting for us in those segments. So we've got to have a clear route to winning, otherwise we won't do it.
Very good. Back to you, James. We've discussed revenues spread across the world, and the world is a volatile place at the moment. Could you give one of our viewers a little more detail on where you are sourcing materials from into your ultimate products? And of course, there's probably an opportunity to talk about China in that context.
Sure. I'll maybe start, and then Thomas, please jump in afterwards. I think broadly we do source just over 50% of our products from China. The rest of our supply chain being global, in particular Far East and Europe. I think the point about China would be that we've got over 30 people on the ground there that are employed by us in terms of quality control, focused on their own individual product areas. It gives us great resource and great ways of managing our supply chain, like we found during the container issues, where costs of containers increased tenfold, but equally the availability of containers made it sourcing a little bit more difficult. Interestingly, that was actually an opportunity for us at Norcros and across our businesses. Because of that resource on the ground, we're able to utilize their connections and knowledge to maintain our supply chain, which, as Thomas has mentioned previously, our smaller competitors weren't able to do. So I think our supply chain and that China relationship is very strong and is actually a really good differentiating part of our business.
Yeah, maybe just to add a little bit there, Andy, this is a question that's asked a lot, but, if you source something from Italy or Turkey, I can almost guarantee there's a component coming from China in that anyway. So, of course, we look at our supply chain resilience. We have dual sourcing wherever possible from a geographic piece. And the world is relatively unstable. I mean, Eastern Europe was an obvious area not too long ago in terms of that. We see North Africa developing as an area for sourcing going forward, India. So the opportunities are all out and about. But, if China was a real problem, it would be a real problem for everybody, regardless of where they were sourcing from. So I hope that helps.
And I hope we don't get to see that problem. Thank you. Very clear. Right, we've got a question going back to pandemic days. Can you give an indication or remind people where volumes are versus 2019 and those distant days of normality? And the questioner is curious whether there was any pull forward in demand through the dynamic, through the pandemic, and whether there's been a dynamic of volume decline being offset by price increases through the recent 18 months of inflation.
Okay, maybe I'll kick off and say that, volumes remain behind 2019 or pre-COVID. But in saying that, those volumes are increasingly recovering and getting a lot closer to where they were at that time. I'm talking like for like volumes. For sure, price did offset some of that volume. But I think what you're seeing maybe a year and a half ago, you might have had double-digit volume declines offset by the same amount in price. Both of those have narrowed. We are starting to see, I think if you spoke to anybody now versus a year ago, people are more confident about the market, both on the new build and, in fact, even RMI, which remained relatively resilient. In terms of the volume being pulled forward, there was a little bit of that. And when you say volume pulled forward, it was more a case of people were buying but couldn't get stuff installed. I think we're getting back to a more normal market in terms of where we are now. And I think once the house building piece pick up, it will, we will be back to all else being equal, where we were, and you started to see steady growth. And in that scenario, you'd have some volume growth, some inflation growth coming through. But again, important point to note, through all of that turbulence, because we had market leading brands, not only do we protect our volumes, we were able to lead in terms of our pricing. Our customers understand the quality of our product, the product availability, and why they need to stock the Norcros brands that they do. So we certainly are not as cyclical. We didn't get knocked about, and we maintained exceptional service levels through COVID, post-COVID, and right through the Suez piece. And that is just an absolute strength of Norcros. So I hope that helps with that question.
Yeah, no, it's trust has been built through the difficult times.
Big time, yeah.
And you've clearly a mind reader, Thomas, because the next question leads on from your comments about the UK building market. A very strong position in RMI, as you say. If and when the new home build market picks up, do you need to pivot, or do you already have the necessarily relationships with the house builders to capitalize on that point in the cycle?
We have a market leading position with the house builders. Our business pretty much mirrors the market in terms of the 80-20. And sometimes that's 75-25, just depending on how much new build is going on. But we've got market leading positions. And if you go back probably to our last two investor presentations, you will see a slide in there that maps out the top 10 UK house builders and our positions in those. There are some gaps, but we continue to take share. And I think the fact that we have a strong sustainability position on water heating will see us take more share in the house builders. So we are perfectly positioned to benefit from the upturn in house builders. Yeah, so it's a good model. You know, we're strong in both.
Yeah, very reassuring. Yeah. And then perhaps the last question, finish on a high note. You are justifiably proud of a very high vitality score. Yeah. How sustainable is it to keep that vitality score above 20%?
It's totally sustainable. You know, we spend a lot of time doing consumer insight work, market insight work, and the market keeps moving. And, you know, we touched on sustainability, we touched on aging population dynamics, we've touched on digital. So our teams are working flat out, and you know, they're a very quiet. We don't often talk about them, but we have some of the very best teams out there. So, you know, we know what the market wants. We work hard on what the market doesn't know it wants yet, and we have teams and investment making sure that we're ahead of the market. And given again that we are a decentralized business, our speed to market is much better than many of our competitors. So very comfortable that we can keep the vitality at the levels they're currently at.
Great. Well, you know, thank you very much to our audience for a wide variety of questions. To repeat, this webinar will have been recorded, hopefully successfully, and will be distributed. The audience will receive questions for feedback on specific points of the Norcros strategy and presentation, which, needless to say, both Thomas and James will be very curious about your impressions. So please fill that out. There is a lot of data constantly referred to in the presentation on the Norcros Investor Relations site, including the full video of a long capital market session last week. And there is, of course, plenty of research and analysis on the equity development side, including forecasts and also comments on the still far too low rating of Norcros shares. So thank you finally to our presenters, Thomas and James. Very, very helpful session, and wish you a good reception for your results on the 13th of June. I think the full year numbers come out. So thank you both for your time again.
Thanks, Andy. Thanks, everybody. Good to have you on.